Good morning, everybody. Welcome to the Flow Show, Thursday, the 4th of December. And we're nearly at the end of the week already. Been a bit of a fast one this week. And I hope you've all been doing well, trading well, keeping those pips coming in. Morning, Kay. How's he doing?
Morning, mate. Morning, mate. Yeah, morning, everybody. Yeah, doing fine, man. As you say, it's been a fast week this week. Yesterday was kind of busy, loads of stuff going on. So yeah, it's been a fast one.
Yeah, fast one without actually that much going on,
Yeah,
really, apart from a few bits and bobs floating around. But yeah, weird old week, but they are going by really, really quickly. Right, let's get cracking and get through all the news. Starting off in Japan, we've had Chief Cabinet Secretary Kihara saying it's even more important to communicate with the market home and overseas to buy JGBs. He also had a usual waffle on about FX and how it needs to be moving stably and blah, 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 blah. Nothing new from him. We had Governor Ueda out, Bank of Japan Governor Ueda out again in Parliament. Back to his cautionary self, he says there is uncertainty on how far we can eventually raise interest rates. He said we are working on narrowing our estimate on the neutral interest rate and we'll disclose our findings if we can successfully do so. It was around the whole conversation was pretty much around neutral rate and where they're going to go. He also said that the policy setting remains accommodative. After that, or earlier on this morning, we got some sources stories out, shock horror, saying that the bank are likely to raise rates in December and that the government would tolerate such a move. So these sources saying that at least from the government side, they would green light a rate hike. So it's pretty much nailed on, as we've been saying. It'd be a bit of a shock now if they don't hike in December, but that probably just kicked the can until January. But we're on the path for that. Kay, let's talk about, I mean, it's something that Ueda mentioned last week and earlier on about, you know, how even a rate cut is just less easing rather than tightening. But there's still this talk on neutral rates and how far they're going to hike.
That neutral rate. I mean, okay, the definition of a neutral rate is pretty simple. It's the rate where you have an equilibrium between supporting the economy and not be spurring inflation. The problem is that they will never get to if inflation even stays at 2 or 2.25%. I would be extremely surprised that they will even get there before 2030. You know, I think we've been saying it so often. Another couple of hikes over the next 6 months, 1 year. December seems to be now a done thing, unless an extreme event. And then maybe another 25 somewhere, half year, like they roughly have been doing, not this year, but last year, right?
Yeah.
Like every 6 months or so, and then take the rates to 1%, she's still low compared to the most of the other countries, take apart Switzerland. But yeah, I mean, much further than that, they won't go. And all this theory about the neutral rate, they will come up with a neutral rate, which is probably going to be a band where the market will speculate, oh, the midpoint is this, so that should be the neutral rate. No, the neutral rate, their estimates are just what they are. We know that the ECB has an estimate of a certain level, but then with an error margin where you could stick the Eiffel Tower in, right? So yeah, it's all theory, man. That neutral rate, really. I think we just got confirmation that they will hike in December, and that's it. If they don't, I don't know where the yen is going to end up the year, but it's not going to be pretty. But no, they should, right? And that's what we've been saying for 2 months, 3 months even, that December would be a clear meeting to put it on the table.
Yeah, their neutral rate is probably anywhere from here to 1%. So it's not going to be
Yeah,
a 1 to 3% band. You can,
no, but they could stick like 0.5 to 2% on it, for instance, and then the market is going, oh, they are going to go to minimum 1.25%, which is just theory, right?
yeah, which they may do in another 30 years. But
Yeah, I think the neutral rate in Japan is 0.99 to 1.01.
Yeah, exactly. Nice and tight. What do you want to do? Right, let's move on from those guys over to the ECB's big onion. Cipollone says risks around inflation seem balanced. We're taking decisions meeting by meeting. The economy has been resilient, but there's still many risks in the pipeline. Lagarde was up for a couple of appearances yesterday. She said growth in economic activity should benefit from increased household spending and a resilient and more inclusive labour market. Over in the UK, we're winning again. Rachel Reeves has saved us, or is going to be saving us £150 on our energy bills. Whoopee! That was something that came from the budget. And we've had a story today that there's going to be a 28 billion investment into energy infrastructure, which will add £101 to our bills. So with any luck, we might save ourselves 49 quid. Oh, I don't know where they get these people from. I really don't. I dread to say it. We were talking yesterday about this rally in the quid and how the UK press will probably jump all over it, saying it's all down to how good the UK is, particularly on the bounce in the services PMI, which was just a bounce over the flash. It was still down on last month. The FT fell into that trap by saying that sterling had jumped because of better private survey data and reversing negative bets, which, as we know, is absolute horseshit. Well, if the FT liked that PMI yesterday, just the improvement, still down on last month, they would have loved the construction number they got today, which came out at 39.4, was expected to rise. I mean, if it went in any more in contraction, they'd have to construct a hole to bury it in. And look, the pound hasn't collapsed on that number, so the FT talking absolutely rubbish as usual. We've had Bank of England decision maker panel survey that saw 1 year inflation expectations up a point to 3.7 from 3.6 previously. We've had Eurozone retail sales out this morning as well, which came in flat, shock horror. So that resilient consumer Lagarde was talking about increased household spending isn't there just yet. Well, wasn't in October, although the year-on-year number was up a little bit. But on the month, absolutely nothing in there at all. Back to data from yesterday, we had the ADP out, which came in at minus, I've got what the number was now. Where was it? Minus 32,000. Where was it? Right in there.
Yeah,
there we go. Minus 32. Yeah, go on, mate.
No. That's it. Minus 30.
Yeah, and again, I don't know how these expectations, they range from up 5 to I saw up 20 somewhere. When considering we'd had all those negative numbers on the Tuesday reports, I don't know why people were predicting a high one. Anyway, it came in at minus 32, which was a bit of a wobble. But it's okay, it's there or thereabouts. We know the jobs market is softening, unless we're seeing some minus 200s, minus 300s. Even these little ones, 32,000 in a population the size of America, it's not a big deal.
No, it's not a big variation, but yeah, the market just saw the negative number, and that's it. Algos and day traders react to whether the number is green or red. Let's say.
Yeah, exactly. We've got a bit of pricing data as well, all the catch-up data, September import and export prices, which saw decent numbers on the export side, up 3.8%, but year on year. On the import side, prices only up 0.3%, so some potential margin relief for firms. The numbers were flat on the month. We also got some industrial production data, which is a little bit on the wobbly side. Coming in manufacturing was flat on the month. Industrial production up 0.1%, but capacity utilization had a pretty steep, it was unchanged only because that got revised lower, but it's come down pretty low, which again, par for the course in what we've seen in the manufacturing sector that is a bit negative at the moment. But again, this is September data, so a bit stale. We've got the final services PMIs dropping as well. Canada saw a wobbly one, going from expansion into contraction at 44.3. The S&P Global final number came in at 54.1, so a bit of a negative revision down. The flash number was up 2 points, so that one not doing too well. Then we've got the ISM, which was all pretty much okay. The headline number rising to 52.6 was expected to dip, so that was okay. Prices paid came down a bit. Employment was less crappy at 48.9, but new orders were down. This is one of those numbers where you thought where new orders doesn't really impact the headline number. So even though it's a positive headline number, with new orders coming down, just shows there's other things going on. Backlogs, supply deliveries, all those components help the index rise. But otherwise, Kay, another set of data, no collapses, bit of softness here and there, but everything's tickety-boo.
Yeah. Employment stays below 50, but marginally right. Yeah, nothing like that's what we say yesterday. Nothing to get hung about on those numbers, and we are not getting too much wiser on on what's really going on. So that did not give us an indication that we all and the market was waiting for the last big indication or so. Well, unless you want to hang your hat onto the claims that coming out, those are coming out today, but they haven't moved for months. But yeah, none the wiser or no decision maker for next week FOMC.
Yeah, absolutely. So we go into that, still looking for a cut coming. We had Lutnick out after all the data saying that tariffs are not to blame for the negative ADP figure. Well, don't know why he's making those sort of conclusions, but there you go. He also thinks that 15% is the sweet spot for tariffs, saying above that level is when you'd see price rises, but you won't see price rises at 15%. Treasury Secretary Besant says tariffs have not set off an inflationary mindset. It says certain sectors of the economy have weakened and we need rate cuts. Says he's very optimistic about the economy next year as investment is up. Speaking of the Fed, we got a little bit of a wobble thrown in yesterday. Fox reporter Charles Gasparino says that, speaking about former Fed Governor Kevin Warsh's chances, saying a person involved in the process is saying that his chances are better than the media suggests. As has been floating around for the last couple of weeks, Hassett is the main man in line, but apparently sources are saying that Warsh isn't out the picture. I don't know, because Trump says he's got his final one, but who is it? Charles then followed up saying that apparently there's a last-ditch effort by Wall Street and corporate America insiders to caution Trump about the selection of Hassett as Fed chair. So it seems like there might be some sort of pushback against Hassett. What it's done is obviously thrown a bit of uncertainty into the mix. If the dollar was getting sold off on Hassett, it hasn't really reacted to the fact it might not be Hassett. We're still seeing the dollar on the weak foot. So, Kay, is it now two people in the running for the one seat?
Or a third dog? Why not Waller? Because if Trump doesn't seem to be a big supporter of Wash, where Wall Street is rather behind him, right? But if you can't choose between the one or the other, why not to pick the third one, who is already on the board?
Yeah, but
okay. I mean, as well, Besson as Trump have hinted enough at I forgot his name now. Hassett, right?
Yeah.
If have hinted enough at him, so it should in theory be him, right?
Yeah, I mean, I don't know why he doesn't just announce it. If he's got his final one, just announce it and put everyone out their misery.
But that's probably Trump keeping that little bit of bit of an optionality, because sending out all those messages, it was always going to to cause a reaction, right? And
Yeah,
maybe that reaction from Wall Street is going to be enough because he's a how shall I say, entrepreneur or whatever. He thinks about money. Maybe that's enough to after all make him change his mind. But I 90% done perhaps.
yeah. He's taking the leaf out of Rachel Reeves and every other chance to send out the old trial balloons and see what the market says about it. And yeah, but anyway, that's injected a little bit of uncertainty into the Fed chair process anyway. Right, Trump also out saying that we will either let the USMCA deal expire or make another deal with Mexico and Canada, which is a bit of a repeat, but we're getting closer to when that's all going to come up for negotiation again. Right, over to this Ukraine stuff, more stuff going on from the European side. So the European Commission, EU's von der Leyen, is proposing to cover 2/3 of Ukraine's financing needs for the next 2 years, either by borrowing or using frozen Russian assets. The other third will be picked up by other international partners, such as the US. Now, this is causing a bit of a bum fight at the moment because the ECB, particularly Lagarde, has said that the European Commission's proposal to use Russian central bank assets to extend reparation loans to Ukraine is a stretch from a legal and financial point of view. Lagarde herself came out after saying the ECB will not violate EU treaty for Ukraine and cannot monetize EU member state obligations. Now, this is, as I said, this is a big bum fight. We've been talking about this for a while over whether they're going to use Russian assets and if they use them for a loan to Ukraine. Obviously, Putin's been pushing back against that. Even your current PM, is it, in Brussels, is against it as well?
Yeah, because most of those frozen assets are located in Belgium, and he's afraid that if things go pear-shaped, that Belgium is going to be liable for I don't know how much, hundreds of billions of euros in the end. So and it is a fact that. And Lagarde, I think, has been touching upon that as well, that it's limit border for the international court, etc., for those things. So if it goes there, it could end up firing back at the EU, and perhaps he's right to point the finger at that. For one, even though von der Leyen yesterday was very active in minimizing everything and trying to win him over, saying that they would at least for the first set of loans cover 2/3 of it, etc. But yeah, I mean and it's Europe again, right? We are not at the end of it. Yeah, it's yeah, they want to do things the legal way for him at least. There's an issue with that. We will see how it works, but that's Europe again for you. Nobody stands up and says like this is it and sod everybody and sod Russia and here we go. You are not entitled to have anything back.
Yeah, and one part of it is that they want the ECB to guarantee these loans or provide the backstop for these loans, which that's not really the remit of the ECB. And
no, and Lagarde is not the only one at the ECB who came up with reservations about the legal ground for going there, right?
Yeah, exactly. Right, moving on. There's going to be some negotiations between US and Ukrainian bods today in Miami, in further to the peace talks and knocking together a deal. Before that, Putin's been out saying that Russia will take control of Donbass by military means or otherwise. This is one of the big talking points that's happened during this peace deal, that what happens to the Donbass? Is it going to fall into Russian hands, or is it going to be taken back? Well, according to Putin, it's not going back in any which way. So some red lines being drawn there. They also beating on the EU again, says if the EU steals Russian assets, then it may be considered to be tantamount to an act justifying war. So the threats keep rolling in, which is something the European bods will be considering if they want to use those assets. Right, that's that done for today. This is any news you've heard about, Kate?
No, that's fine. Maybe when we look at the yen, worth mentioning that we had the best 30-year bond auction, JGB bond auction, since 2019 overnight. And
Yeah,
that's
we do.
I'm not sure whether it's the early signs of, but just want to remind people that the Japanese institutions, whales and insurers and trust funds, they have been diversifying away from the long end for I think a year now or so. And going into the shorter maturities, a bit of US bonds, etc., etc. Could this be the first sign of some things to come? Who knows? But it's just something that I noted today, and I guess it may have been apart from the rest of the dollar and then UEDA just stopping short of confirming a rate hike. May that just be a first sign, and it could have participated in a bit of the yen recovery today.
Yeah, I mean, if you're looking down the long end, yields here compared to Europe, you were mentioning, narrowing yield gaps. Well, that's happening here as well between Japan and the rest. And so, yeah, it could be becoming a little bit tempting for some people to park up in.
And I don't know whether it's because it may just be the level. Oh, by the way, they're not in year end. So if people think that those are year end or window dressing or whatever you may call it, that's not, because it's not year end in Japan, right? That's only end of March. But if this is an early sign, that could actually be quite positive for the yen, because it's going to help the government to fund even for the longer end if they start to step in again. Of course, those yields are far too high for them, but if the Japanese investors go back home, that's going to make the Japanese government work a little bit easier as well.
Yeah, but still relatively cheap in the shorter end, which is obviously we know they're going to be concentrating on any issuances down there.
Yeah. If you look at the 2-year, which is turning around 1% now.
Yeah.
You've got it just above there. Yeah, that's about where the market expects the Bank of Japan to land in the end.
Yeah, so that'd be a good metric to watch.
Yeah.
It's been a long time since we were last up there.
Yeah.
What do they call this pattern? The toilet bowl?
I don't know, mate. Looks like an accolade or so, but on
Wine glass.
tonight.
Looks like a bit of a wine
Could
glass.
be.
You could draw
Could
a
be.
stem off that. There we go. We've just invented a new technical pattern, the wine glass. We'll be flogging that one in books later. Coming to a bookstore near you. Right. Okay. Let's look at dollar yen while we're there, because that's had a little slippery under 150 again. 155, I should say, which held pretty nicely a couple of times. We had this blip, bounced, came back, held it, but now we've broken it again. So this one could be the one that has some legs if we see it holding below. So really you need to be looking at tests. I think we already had a little nibble there back up. Yeah, so look, we're already starting to resist it there, which we tried a little bit there, but it didn't last long. So this one might be one that keeps on going. So keep an eye on that 155 level, which is a pivot point for at least intraday, if not for longer. And if that keeps going, then we're probably going to be heading down to at least 154.5, which again is a bit of a level. Got a bit messy here, but then right after it started being support again. We haven't been there for a while, so I would expect to see a bit of support coming in there. But otherwise, Kay, this one still seems to be looking down. It's not. Yeah. It's taken its time, but definitely we're in rally sell mode rather than dip buy mode as we were for the last
Yeah,
2-3 months.
yeah, I wouldn't disagree with it right now. It's been a long while, but some little signs here and there that maybe at least the top side may have ran its course, and we could correct a bit further. I have quite a few levels there around your first white line down there around 153. Let me just check where it is on my picture. 150 from 153 and a half down. I've
Yeah,
got a bit of stuff ongoing there as well. So
yeah,
yeah, and the 153.16 there, which you have also. So that could be an interesting little zone to watch if ever we get down there.
yeah, absolutely. Euro sterling's on a bit of a slippy as well. That's back under the 88 as we knew and talked about yesterday. It's now below the zone. We had the break of this area down here, the 40s, 50s. It's trying to resist at the moment on bounces back there. A little bit messy, but generally it's looking like into this area, it's looking a bit, or resistance has been building up. We haven't had a test down yet. I'm still looking at this 87.20 for a bit of a trade because it is the big old level, one of my big levels. We're probably going to see support starting around the 30s. I don't think that candle is valid. I think that was just a broker roll candle potentially in there, depending on what the time frame is. But if it isn't, then we've seen support there as we've been expecting yesterday. So 87.20s, if I have a go at that, it's not going to be one I'm going to sit in for ages, depending on what happens after, because obviously when we get to the Christmas holidays, we're going to have potentially a 2-week, 2.5 week period where the market does nothing. And you've got to watch your carry over those periods because you're just going to burn money while the market does nothing. So it might make sense to exit out positions and then reinstate them closer to the change of the year. So you're not just burning money like you're burning Christmas presents. But otherwise, this is looking a little bit wobbly. But again, Kay, I can't say this is because the pound is doing better because of fundamentals. This is a bit of a cable speed move, I think.
Yeah, is it not just what we thought may happen? In
Yeah,
the end, we said sterling weak until the budget, and then we will have to see afterwards. And I think the market is just getting out of it. And then short sterling market, I I'm not sure whether probably a bit of both, but I'm not sure whether it's really getting out of euro sterling as such, or that 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 speed rally in the cable, and because all of a sudden cable, we saw it starting to hold, as I already showed yesterday, below 132, and then all of a sudden acceleration through 130, 132 and a half, acceleration through 132.85.95, and there we were all of a sudden at 133 and a half, right? And together with some other dollars. So it's probably a bit of a mix of both, but yeah, I mean, I agree with you. There's nothing that tells us that we really need to buy sterling, but the move is understandable from a sell the rumor, buy the fact kind of thing, you know?
yeah, yeah. But it's the thing is, it's not being accompanied by a move in yields. If yields were
No,
still
no,
coming down, taking some of the pressure off. I mean, obviously they're not going up, but they're not. We're not breaking any of these levels just yet. 30s might be looking to do so, which
no,
might
and
add
mm.
a bit to that.
And
Um,
I would argue if you start to break those levels below, that's the really long term. But there's maybe on the shorter, on the tens or so. If you start to break those levels of 438, etc., we may see an inflection point where again it's weighing on the sterling, and
yeah,
because if you have, there's always two things about you weigh inflation against growth, and that's what's going on in most of the bond markets right now. But if you start to break below there, that means but probably uh, a lack of belief in growth as well, and that could be an inflection point that takes the sterling lower. But as you said, really rightfully said, watch, because we are getting into the end of year, and maybe maybe some people need to get out of positions, and you will see a bit of a move under there in those yields, and then in the new year, all of a sudden the market takes notice of it and takes the sterling a leg lower. So yeah, and it's sort of what has been expected, but now we are
Yeah,
back to square one for what the value of the sterling is
yeah,
concerned. I wouldn't be surprised if we get down to 87, the figure in euro sterling, before the year is over. I mean, it's still a very long time, but I wouldn't be surprised. People getting out, as you say. I mean, the longer you're long euro sterling, the more you pay carry away, and all of that is obviously playing. But then maybe in the new year, the party will be over, and sterling will weaken again.
yeah. I think that's it. We haven't had much from the Bank of England, apart from Green, who is getting a bit worried. But yeah, you're right. We've been saying about this inflection point. Yes, we've had the reaction after the budget. Now we need to look at what happens moving forward, whether that
Mm, mm.
starts playing into before the new year. I suspect it will start rearing its head into the new year. The market will get a bit more dovish. We'll have some more data. We'll see what the Bank of England does, obviously, this month as well, and what their message is. And that could get the ball rolling if they turn a bit more dovish on the lack of growth forecasts, shall we say? So yeah, don't trust this pound rally at the moment, is what I'd say. Okay, yeah, you can trade the techs of it, run with it while it runs, but have in the back of your mind that this isn't moving on the fundamentals. This is moving a bit of a reaction, and also what's going on in the dollar. So it's a bit
Positioning,
of a
yeah.
double, yeah, a bit of a double bubble for that one. Quick look at dollar CAD. Let's just go into the short one because that's still faffing around as per usual. I managed to stop myself out pretty much at the low of the day on a little ad I did, 39.80s. I'm not that bothered because it's still looking pretty weak. Again, this one might just in the short term have changed
But
or changed its tone.
I know you're not a big fan of trend lines in general, but if you put so you take the 23rd of July, you start, so that low, and then you over the low in on the 17th of September.
That one,
The 23rd of July you start.
23rd, that one,
Later,
yeah.
later. Yeah, and then there. You see where it stopped?
Yeah,
Mm.
yeah, and also against that prior low as well,
Yeah, exactly. I
just
mean,
down
that's
there. So
that I think is a bit of a level there. If we get below there, may see a little bit of an acceleration, perhaps, in the cat, which is, I don't know whether it's warranted or not. To be fair, I think the what if the main mover is only going to happen when Trump comes up with something about USMCA, right?
yeah, my worry now, or my worry since this move, is that bounce ran into that 2030 area
Yeah.
and nailed it, and now we're down. We haven't made a new low, so yeah, that shows that there's something here. But again, this bounce at the moment is looking pretty weak. If we can't get through this level today on any sort of dollar rally, then I would not be surprised if not too long after we're breaking down towards
Mhm,
139,
mhm.
because we are just every rally seems to be getting hit harder and harder. Just look at this one, this one, this one rally, this one. They're all coming down quicker than they're going up, which just shows you that the mood might have changed for a bit. So, yeah, we'll see what happens with this one. Right, I'm going to pass it over, Squire.
Yep. Just a quickie back on that cable, because I think it's interesting to look at what the next level is, and we are getting closer there. Okay, 133, 70, 90. Look at this, and even if you go back further, you could actually look at it. Even started to show up in. back in 2024 somewhere. But that 133.70.90 here. Okay, here we got through, but it's also, sorry, been the last two couple of highs there. October 133.85, October 133.70. Okay, so 133.70.90. I think that's the next test level for the cable, and we are not too far away from it. We are trading around, we're trading just below 133 and a half. I'm still a tad long from, yeah, somewhere. Where did I buy it? Around here, I think, somewhere. Um, but I've let some go here because I don't know whether this test is really going to be conclusive. It's still at certain points in time we still see a bit of dollar selling, even though euro has stalled a little bit. But if that goes through, then we I guess we are going to trade relatively quickly around 134 and a half. And so there's this double thing we were talking about with Ryan already. The dollar is showing a bit of weakness, and then those markets still probably buying back shorts in sterling, right? There is, let's have a quick look at the Aussie because that is also coming into an interesting zone. So you get back to July, a high at 66 and a quarter. Then we had this fly through here, which was, if you look at there, we also stopped there and then we flew through. And when we came back below there, we stopped again at 66 and a quarter here as well. And we are nearly there again. We're trading 66.10 right now. So 66.25.30 on the Aussie is the next hurdle, okay? So and we have a few pairs like that, even if you look at the euro around this 116.70, although we've already been trading higher, we're at quite a few dollar pairs where it's interesting, and oh, dollar yen is actually going lower now. But where we may see a bit of a hesitation, but if it goes through, we could see a fresh elan to take the dollar even lower on different pairs. Have a quick look at gold, and because that had this is a short term now, and it stopped right there, 41 three quarters on gold. So that is also still holding. Um, Not sure if we're straight away going to fly, but it's holding above the more bigger support zones, so that's still very constructive. Silver though is showing a little bit, not going to say weaker picture, but hesitant right now. But it did obviously fly faster than what gold did in the past week or two, right? But it's stabilizing between 56, 35, 40 and that high 58. Okay, so breakout side is probably going to cause a few moves there as well on on silver. And actually just showing that Dorian quickly again, because we are trying to break lower here, and that's where I meant around this 153 and a half down to, or 153.30 40 down to 153.15. This is that a longer term trend line coming in there as well. Anyone else having anything else to look at? Um, yeah, there is one that I didn't push the button, but this EuroCAD is still very well trading this channel as well. We had a quick look below 161 three quarters there, but bouncing. So this is still in its channel too. Meng, sterling yen. Ooh, sterling yen is a difficult one. And because yen is strengthening a little bit, but sterling is strengthening at the same time. But overall, still in a very, very constructive channel, okay? But that's that is pretty far away, okay? This level here, that's only coming in at 202, 201 here as well. But overall, still very, very constructive. If you want to, I don't know what you're looking at, Meng. Are you looking at a breakdown or continuation? If you look at a continuation, we could go all the way up to 208. If, but therefore, I think yen should, yen should stop strengthening maybe for now. On the other side, if you start to get below 205 and a quarter, 205 the figure, we may get a bit of a deeper correction in there, man. Again, I don't know what you're looking at, but if you look at it for more corrections, look at the 205. And it could be that we're getting down to 205 and then bounce, which would be extremely constructive because then we just coming down to that prior high, prior low here, okay? So those are the levels that I would be watching at right now. Yeah, that dollar Noki Dimi, it's holding, but we're gradually closing in. The problem is Euro Noki. I thought Euro Noki was going to be left a bit more offered, to be honest. But Euro is not doing too badly on crosses right now as well. But still the big zone here is 10.02. Stretch it to 10.00, right? If that breaks, then I think we could accelerate. But for as long as it doesn't, we are still in this kind of channel that we started to build from the start of October. Okay, Dimi? And with that, Ryan, back over to you, mate. And I'm going to wish everybody a good week because from tomorrow I'll be off for a few days.
Yep, have a good few days off, mate. We'll see you next week. Thank you for everything. And yeah, I'll maybe see if I can drum up a couple of weeks from roundabout FinTwit and the likes to join us on the show next week. That's it for today. Have a great day, everybody. We'll speak to you later on Face, and take care. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.